Welcome to Looking at the Markets with David Modell. Today we'll be answering a question: should I buy stocks or options before an earnings report? Big gains or big losses? When earnings reports are about to be released, this might seem like a perfect time to bet on the future direction of a stock or option. After all, if your directional bet turns out to be correct, you can make big gains. On the other hand, if your directional bet is wrong, you could sustain a big loss. To make matters worse, the price of your options is likely to decline somewhat due to the post-earnings drop in implied volatility. Instead of making pre-earnings bets, have you considered post-earnings trades? Options are a good vehicle for this strategy because the post-earnings implied volatility decline tends to make options less expensive. Thus, if there's a big earnings miss, call prices decline not only because of the decline in the price of the underlying stock, but also because of the post-earnings implied volatility decline. It's amazing how a good company can have 5 consecutive earnings beats and then one earnings miss and everybody freaks out. The market tends to overreact. So buy good companies after an earnings miss, not before. Wait a few days before you jump in, however. Let the dust settle and give the market time to come back to their senses. Besides, you'll want to wait a few days or more while analysts like Goldman Sachs, Morgan Stanley, and Citigroup probably downgrade the company after its big earnings miss. A good example is when Apple dropped 8% immediately after an earnings miss on April 26, 2016. If you had witnessed the earnings miss and then waited a couple of weeks while the dust settled, you could have bought Apple at a good price. So here's Apple, and then big earnings miss, and then for a couple more weeks, it went down some more, but then it went up quite a bit after that. So if you had bought here, or better yet here, you would have done well. Now, I only recommend using this strategy with high quality stocks and ETFs that have withstood the test of time. Talking about mega caps, blue chips, things like that. Plus, as with any market trade, exercise caution, please, and use small position sizes always. An earnings play doesn't have to be a gamble or a risky move. Wait until the market regains its composure, and you'll see how patience, as usual, pays off. So if you'd like more help with this or any strategy in the markets, finance, stocks, options, and so on, feel free to contact me. My name is David Modell, and you can reach me by email anytime at davidmodell@gmail.com. I hope to hear from you soon. Thanks a lot.